Good morning, everybody. It's Thursday, 4th of May. We're going to do a webinar, current market analysis. I'm just going to wait a couple of minutes for other people to attend. I think we've got people joining, so I want to make sure that everybody's in. Good morning, Benjamin. Welcome. And we'll get started literally in a minute. But I just, again, want to make sure everybody has the opportunity to log in correctly. While we're doing that, I'm just going to have a quick look at some charts. Just get ourselves prepared. A lot of action in the markets yesterday. So I want to cover some of that. Have some more people turning up. I just want to double check a couple of things here. If you have arrived, just put a hi in the chat box and I can see that you've arrived. Hello, Joseph. Good morning. If you just put a hi in the chat box, guys, and then I can get started just to make sure you can hear everything and that you can see my charts at the moment. We'll come back to charts in a minute. Obviously, an eventful evening last night, and we're going to cover that a lot. But I am just waiting to get started. I will get started very, very shortly. I'll give it another 30 seconds and then I'll get started. Okay, let's get the main screen up first. Right, guys, as I said, it's Thursday, 4th of May. We're going to do some current market analysis. My name's Anil Kumar. Just do remember that this presentation is for education purposes only and is not intended as an investment advice. I would kindly ask you just to read this risk disclaimer, which is mandatory. Just points out the risks of trading and that you understand this fully before starting, if you haven't already started. And just a picture of me, head of trader education, 20 plus years experience trading just about everything, futures, bonds, commodities, Forex. My goal and purpose here is to help beginner, aspiring traders to pass on some of my knowledge, some of the techniques that I use, and hopefully they can either help you and guide you on your path, or hopefully just get a better perspective of what is happening in the markets, today. So from an agenda perspective, that's my introduction. We're going to do some market analysis. I'm always open to requests. So if you want me to look at a particular currency, particular commodity, then don't hesitate to just type in the chat box a request, and I will take some time sort of looking at that chart. And obviously we had US Fed rate hike yesterday. It was expected by forecasters, so we can have a look at how that impacted, various commodities, for example, gold, the euro dollar, and we'll look at some indexes as well and see how that announcement and the subsequent speech affected markets. From a pure technical perspective, I'm not going to go too much into the fundamental aspects. We do that on other webinars, but today I just really want to focus on technicals and see how we can utilize the shift that's clearly happened and how we can then reposition or position our mindset in terms of, market direction. And that's what I'll kind of be covering mostly today. But before I do that, on Tuesday, I showed you the Zenfinex Economic Insights tab, and we're going to cover how to get access to this in a minute. It's free, but what I find particularly useful is see how the Fed interest rate decision affected the euro dollar in this particular case, and what it did afterwards, and we'll look at what is happening right now. So I will spend a bit of time on that a bit later. But the main, things that I'll really want to cover is, the ones that I do on a sort of regular basis, that we kind of start getting a bit of a flow in terms of, a sort of daily perspective and how markets are evolving. And the purpose really is just to get in tune with what is happening. It's very difficult sometimes just to look at markets in isolation at a particular day and try to figure out what's going on. It's kind of much better if you track and follow this on a daily basis. And it's good practice for you anyway, because you can see what you thought about the markets yesterday and what you think about the markets today and what might happen tomorrow. And by doing some journaling, you can start building up your confidence and saying, yes, I was right. I did expect that to happen. And this is part of a reinforcement process that traders generally go through. You have to be dialed in, you have to be tuned in to whatever instrument or instruments that you may be trading. You want to see how they've been behaving, in the past days, in the past weeks, what has been happening, what is likely to happen as a result of today's price action. So I would encourage you guys to, look at the charts on a daily basis, make some notes, and see how those notes panned out. The great thing about doing that is that you can go back 1, 2, 3 pages and say, okay, I thought that then, what has happened as a result of, and what is likely to happen next. Because remember, trading is all about trying to figure out where the market may go next, and you need tools, you need expertise. There are other things like risk management and psychology, which we're going to cover on other webinars, and I will probably hold special webinars which are topic specific. For example, the psychology of trading. We'll spend a whole hour talking about what it is, how it impacts your trading, and how you can overcome some of those hurdles that probably prevent some traders from progressing. Trading, I know I'm going to say a very cliche thing, it's a journey, and part of that journey, you're going to learn things along the way, and it's important to understand that that learning process is all working towards you getting to where you need to get to. So we'll spend some more time on those topics. My plan is to really do these webinars on a Tuesday and Thursday, and I will probably do special webinars which cover specific topics that I've just covered. And the tools we're going to be using, the free tools we're going to be using, are on the Plus Zenfinex website. Just register and you'll get access to them. So let's now go straight to charts and start figuring out, what has been happening. And those of you who have been attending my previous webinars, you'll note that I had put this range that gold had been, so sorry, this is gold on a 4-hourly basis, had been creating this range, and really it was waiting for and trying to figure out what impact the interest rates may have had. And we can now see, as a result of those announcements yesterday, what has actually happened. And those of you who want to dig out my previous webinars, you'll remember me saying, look, once it breaks out of this, don't chase it, because more often than not, it will come back and give you another opportunity on a retest. It'll come and kiss the top of the range, and that is the perfect entry point. Yes, you had to be mindful of the fact that there was going to be news coming out and how that would impact. So the news bar, actually, for those of you who are watching the interest rate announcement, was this bar here. So we had this whole range, going up and down, up and down, up and down, no real clear direction. And obviously the hike in interest rates by 0.25% has increased the value of the dollar against, the gold against the US dollar. It had that spike, absorbed the information, waited for the speeches, etc. And then it came back, gave you an opportunity for professional traders to take the retest, and they took it all the way up to actually beyond a previous high. And I'm just going to go back and do what I always do every single day that I come here. I'll start with a weekly, and I then make sure that I have all the points that I really want to cover. So these lines would have been here weeks ago, right? So, and what did it do? It came exactly to that point. And these are great areas for profit taking, because when you have spikes like this from a weekly perspective, there is a good chance it's going to come and retest it. The challenge for us now really is to figure out this spike that went through. Let me just magnify it a little bit. Is this just a flushing out of orders or liquidity that may have been above here? Because do remember, a very obvious bar like this is places where you would, if you were on the short side, you would be putting your stops here, right? You'd be putting your stops around here if you were on the longer term short trade. And if you were looking for a breakout, you would also put orders here. And you can see that this breakout would have either stopped out the shorts or would have giving pain to the longs who were waiting for a breakout of this range. So it's always interesting to watch how these things develop. Let's just now drill down to a smaller time frame. And as you know, when I do this, I start from a longer term perspective. And the reason why I do this every day, because it makes sure that I don't miss, market structure from previous, and then I drill down. It only takes a few minutes. And once you practice this over and over and over again, you do it in a minute, basically. You start from the weekly, stick some lines on, go to the daily. You can now see that this level of resistance that we had previously has been broken through, but look what it's done. It's came back right to retest this. So it's a common thing that happens with price, particularly fast moving price. Whenever you get these long bars, whenever you get this long movement, prices would exhaust themselves, come back and pick up some more liquidity before going on. Because what tends to happen, and I'm sure a lot of you know this anyway, it's all about stops and targets. It's about where to put your stops and targets and where other people put their stops and targets. And this is a classic example here where no sooner had it broke this high, it retreated quite rapidly. And if I go down to a smaller time frame, it literally spiked. And if I go down even further, we can see that that bar that spiked at around, I can't see the time here, but it spiked, and within 5 minutes, it had its move, picked up all the liquidity that was at the top of here, and now the longs are going to be suffering because they wanted to take the breakout trade, and the stops who were short have been stopped out because they had put their stops here. I hope that makes sense. And if it doesn't, please ask a question. I'll happily sort of explain it. And look what it's doing. It's coming right back down to retest this other line, this other level of resistance, is this now going to become support? And this is what we'll be looking at in terms of a trading opportunity. But before we do that, I want to show you the impact of the interest rates on other instruments. For example, what happened to the NASDAQ. So let's have a look at the NASDAQ. I'm going to go back, to the daily, maybe the 4-hourly. And we can see here that the news initially pushed the markets up. And I want to make sure, no, it's probably this. It moved the markets down. So we had this strength coming in, hit a level. In fact, let me draw my levels in so we can actually see what we're doing. So we've got some resistance here. And I'll change it back to the color that I normally use because I was doing some other analysis. So let's just go back to green so everybody gets familiar with my support and resistance line. So from a weekly perspective, came to this level here, came down and hit level here. Remember, we're starting to frame, go down to a smaller time frame, do the exact same thing, frame, price action. We can see that we have this level of support. So prices came up, came back down, only stayed there for a very short period of time and then shot up. And I'm going to draw another one just here. And we can see here that this was the range. And as soon as the news came out on the interest rates and the subsequent press conference, it shot up and then it's retraced almost identically, if we look at it, from gold. Hit a level, not to the same extent, but we can see, look, it came up and now it's retreating. If we look at the NASDAQ, we can see hit a level of previous resistance and has come down now. So what it's done now, it's had its move. If we now drill down to 4-hourly, we can see now that this level here is going to be a level of support, and we've got some resistance here. I might just put another one here because this is the most recent. So this lower one was from the 3rd of April, and this one is from sort of the last, these are 4-hourly, sort of last few days resistance. And so from a general perspective, what has the impact been for indices? So if I go to 4-hourly NASDAQ and flick back to the gold saw a spike up. US NASDAQ saw a spike down, came and retested it. So generally speaking, observationally, the higher interest rate has had a negative effect on the indices. Whether that will continue, that's what we're going to be seeing, because with important interest rate announcements such as these of yesterday, it takes a bit of time for analysts to start absorbing that information, recalibrating, and seeing what their view is on the next move. And so after this, this is the indices, it came down, so 4, 8, 12. So this was the interest rate announcement here, rapid move, came down, and now it's sort of retracing some of that, almost in reverse of what gold did. If I now go to the UK FTSE 100, from a same 4-hourly perspective, right, we had the spike down. So generally speaking, we can say that the interest rate increase, albeit expected, had a negative effect on the indices, had a positive effect temporarily on gold. Now let's see what that impact was on currencies. So the main ones I'm going to look at are the euro dollar. So if we go to the euro dollar and just pure visually, on a 4-hourly basis, it's kind of given its strength. So the dollar is weakening, the euro is strengthening. If I'm speaking gobbledygook, please don't hesitate to ask me the question, and I'm more than happy, to expand and ask specific questions, because sometimes, it's easy for me just to keep talking and, know what I know. But if you guys are struggling or I'm not explaining myself clearly, please do put a question in the chat box, and gives me the opportunity to re-explain it, make sure that you understand it, and that that it becomes beneficial to you. So if you have any questions, guys, please ask. If there's no questions, I'll just continue and talk about the euro dollar. So if we go from a weekly perspective, I mean, even from a monthly perspective, we can see that it was all the way up here, but let's stick to the weekly perspective to start seeing if we can find any levels of resistance, because clearly the market is going up, or the value of the euro against the US dollar is going up, which obviously means a weakness in the dollar. So I'm just going to draw a couple of levels which I think are going to be important, and I'll explain why I think this level 1.1142 is important. The reason why it's important from a weekly perspective is we can see, in previous times, markets have come down and struggled from a weekly perspective and found support there. It broke through that support and then found resistance, tried to, move away from that resistance. Obviously, news events have pushed prices with increased volatility, and then even then it struggled around here to get to this point. So that's why I chose my weekly resistance to be there, because we can see here, even on this week, it broke through, came back, tried to retest it, too much strength, came up, hit some resistance, came exactly back to that point, found support, broke through it, found resistance. So it's so important that you understand these levels, which are clear, particularly if you've been sort of observing them and you kind of look at them on a regular basis. And we can see here it broke through, came and retested it, had all the way moved down to here. And I'm just going to draw a level here. And this is still on a weekly perspective, so quite far away. Not suggesting it's going to come back down there, but we see another level of support here. So now we're starting to frame the market from a weekly perspective. If we go to a daily perspective, we can see we are rapidly approaching this 1.1142 level, probably rounded up to 1.1150, but nevertheless, there is going to be either, right, this is going to sound odd, a break through this level here, or it's going to find some resistance, kiss it, and then come back down. Do we know the correct answer to that? No, because what we have to do is we have to follow price action. And if we're trading the euro, we're going to be looking at other factors that could indicate whether there is enough momentum to push it through this resistance line, which we have now established from a weekly perspective is a strong level. So we're going to be watching this level. So even if we were, minded to take a long trade based upon the channel, the trend, which I'm going to draw in a minute, then we will have to be careful of what happens around this level here. I'm just going to go back to the weekly and project another level. And we can see here, prices came down, hit this level here, came down. It had that same problem at this level, had the same problem here. So what I'm trying to observe when I draw these longer term resistance and support lines is how many times will this level be reached. And if we now go back to the daily, we can start seeing that, right, we've got another level which we have to be careful of. So if markets or the euro dollar breaks through this, where is it going to be next point of resistance? All this is very important, because when you do project or when you do place a trade, you want to know where your target's going to be. and where your sensible stops are going to be, right? So that's something, again, we'll cover on other webinars and special sessions, which I'll devote purely topic specific, whether it's on risk management, psychology. I think I mentioned this before, and by the way, as I said before, in the chat, if you do have a specific request, put it down, and I'll make sure that there's enough of you want a particular topic, and it can be any topic, whether it's indicators, whether it's trading strategies, whether it's risk management, psychology. I can create something that I will almost guarantee you will find useful, if that's what you want. So back to the euro, where are we? So we've had, from a daily perspective, this long bar, it's hit some level of resistance. If I now go to 4 hourly, right, we can see that from a closer perspective, we're now drilling down to even more fine, granular detail in terms of why. Remember, on my previous webinars, I always ask myself the same question over and over again. Why did the markets, or the value of this, turn here? Why did it 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 turn here? And if you ask yourself the same question over and over and over again, you'll start getting an understanding the areas where markets may turn. For example, before this level came down to this level, we would have had a level of resistance. So I'll just remove this block here. So we can see here, even before markets came down to this level here, we had already framed our market, and we could potentially see a turning point anywhere from this level here to this level here. I won't draw too many lines, but there is another level here. And it's going back to what I said at the beginning. Once you watch these daily on a regular basis, you'll start projecting these. So these levels will stay here now. And as I look for trading opportunities, I will be very, I'll know why I put that line there. For example, that's the weekly horizontal. This is the 4 hourly resistance, resistance. And this is the 4 hourly level of support. So the reason why I do all this is because I'm looking for trading opportunities, right? So we can see, generally speaking, right? Generally speaking, there has been a trend. Oops, I think I just accidentally moved a line here. I think that was from here. So we can see here, it's been cycling up, down, up, down, up, down, up, down. And then it started breaking out of this uptrend, i.e. this uptrend had lost some momentum. And really, it's sort of been going sideways. And those of you may be thinking, well, yeah, all this is very interesting in the past. What's going to happen next? Well, with trading, you have to look at what happened in the past and see how that might help us in the future. So we had some consolidation, a breakout to a previous level of resistance, came back into the consolidation, bounced up, found some resistance, came back down. So obviously, right, it should be obvious to everybody that this level has been important for some time. Stuck, broke out, retested, broke out, tested, and eventually it's broken out of that. So the question we have now for the euro dollar, we have to ask ourselves is this range now an area where we can watch? Watch meaning, do we look for a breakout, or do we trade in a smaller time frame within that range? So let's just see if we can put a box in here. And if those of you who are wondering, which indicators do I use? Do I use MACDs, moving averages? I've got a very, very simple answer for that, and that is no. And the main reason, and I never knock people using whatever tools work for them. But for me, I have found always in the past that traditional indicators and oscillators like moving averages, MACDs, and all that kind of stuff work some of the time until they don't. And it's when they don't is when you have all the trouble. This is why trying to understand price action with levels, consolidation, and trends, they are all kind of forward projecting. We can forward project this trend line. We can forward project the support and resistance levels. And that guides us, not necessarily looking at, for example, a moving average, which in a sideways market, you're just going to get killed, because if you take a traditional sort of moving average, sell below a moving average, buy above a moving average, you're just going to get knocked to pieces. And I've been doing this long enough to know that in the long term, these traditional indicators don't necessarily work enough, to make a consistent profit. And consistency is what you're trying to do. So you might as well become consistent in something that works on a consistent basis. So let's just see if there's any questions. Right, so where are we? Consolidation, resistance, resistance. We've got some support here. So we now are starting to frame our mindset to say, well, we've hit some level of resistance. What will happen after that? So this is where we can start going to smaller time frames. In fact, let's just do it in a sequential way. Right, so we can see this level of resistance. This is hourly perspective. So this was the interest rate news announcement, had its big spike. And those of you who are news traders, I'll show you the ZenFinex Plus tool that might be able to help you if you had been looking at trading it. I think I did do an example on Tuesday where we looked at this tool and looked at how past announcements had affected price in the next hour, in the next 4 hours. And we're going to do that after I've gone through the euro dollar, and just to see if we can find anything that might help us determine if there's a trade. Because depending on the type of trader you are, whether you're long-term or short-term trader, from a long-term perspective, you're going to be looking for some sort of breakout out of these levels. From a short-term perspective, you could find, trading opportunities within, the consolidation, for example. So let's just see if we can find something in here by rational analysis, right? So the rational analysis is from this line here, from a 4-hourly perspective, there's been resistance. There has been support for quite some time. So we know that anything really below this level here has broken this level of support, and there's going to be a sharp move down, right? Slightly longer term perspective, because it's quite far away from there, but we know that there's a lot of accumulation here. We've seen buyers and sellers sort of do a lot of transactions in this area here. They've tried to move away, brought it straight back again, bounced straight up, and then it's kind of cycling downwards until we had the news, and now we have some strength. So we have to ask ourselves the question, are we likely to go long or short? Are we going to buy or sell? Which time frame are we going to use? So from a slightly shorter time frame, knowing what we know in terms of this region here, I'll just, for a bit of fun, put a level here. So now if I go to a smaller time frame, this effectively is our trading range, right? If it breaks out of there, we've got some resistance here, and we're back hitting the top of the trend line. If we end up back in this range here, and it hasn't been able to break this level of resistance, that's a sign of weakness. But right now, from a 15-minute perspective, let's see if we can find something that might be interesting to us. So here's the spike of the news. it spiked down and buyers were interested to buy it back again. So now I'm going to start drawing some mini sort of support and resistance lines, which kind of, I'll try to do the best I can here. So we can see here, resistance, support, support, couldn't get much past there. So now from a 15-minute perspective, we're starting to look at how we can take advantage of this, last couple of hours of movement on the euro dollar. So prices went up, hit a level of resistance, and now is probably on its way to retest this. So this now is going to be a key area for us to look at to see what happens. So what could happen? It could either find the same kind of support that it did prior to the interest rate announcement, or it could say this is just really flushing people out for a move back down to here. So now we're starting to build our trading idea from a short-term perspective. And I did say, people have preferences on whether they want to trade short-term or long-term, but from a purely sort of short-term, 15-minute, 5-minute perspective, we can start looking and seeing where can we jump in here, right? We've got some support here, some resistance here, and it's unlikely the market will either come and touch this this level of support resistance, or touch this level of support. So the distance really from where we currently are now to the next level, and I just want to make sure that you guys can see what that line is. Let me just go back to the 15-minute, and you'll see what I mean. So this, I might have to go to the hourly. So this was the level. I think I may have to put a horizontal, but because if I can't get it accurate. And the reason why I put it here, even though there's noise, spike away, it's either going to come and revisit this level here, or it's going to break through here. So now we're narrowing it down even further, right? We're trying to see how we can take advantage of the move and where it may come to. We can see level of support, we can see some resistance. If I now go down to a 5-minute time frame, we can start looking at where we might place trades. Just to let you guys know, I'm going to be setting up a live trading room, which is in a slightly different format to the webinars, because with the live trading room, I am allowed to place live trades on my live account. On a webinar, it's a little bit more difficult for compliance reasons. So those of you who are interested in joining, the live trading room, just send me an email. I'll give you my email address at the end, and register yourself on a live trading room where I will not only analyze the markets the way I'm doing on the webinars, but I'll actually put live trades on. It's for compliance reasons, it's difficult to put live trades, on an open webinar, and the live trading room is the perfect venue for that. And I know what I'd be doing here. And if I was in my live trading room, I know exactly the trade I'd be taking. Right, look, any questions? Let me just see if we have any questions. Okay, what I'm now going to do is show you a little bit of the tools that we have available and how they're relevant. So this is the Plus Zenphonex. Let me put the slide up, that way you'll be able to take the domain and register yourself. As I said, take a note of it. It is absolutely free. And once you get into this this area here, right, I'll show you some of the tools that you could have used before the news announcement, and how that news announcement would have affected markets, and how you could have, if you are a news trader, could have taken advantage of that. So let's just go to that section. Right, so this is the portal, a free portal where you have a number of tools that can help you, free tools that can help you, in supporting your trading journey, whether you're a beginner or whether you just want something for confirmation purposes. And there are some pretty cool tools here. And one of the cool tools here is this economic insights. If I just go to yesterday's news events, we obviously saw that there was, at 3 o'clock GMT, UK time, there was some news there. But the most important one was this Fed interest rate hike, but as expected. And what I really want to show you here is some of the tools about not only yesterday's announcement, but also other prior announcements and how market moved in relationship to that. So what I mean by that is if we look at impact. So what is impact? So impact is at the time of the news announcement, and in this case, it was the Fed interest rate decision, how that affected it immediately, and how did price behave 4 hours after the event. So you might say to yourself, well, how does that help me in looking at this previously? Well, what you're able to do is go to previous events. So this one was the March announcement. And in that case, it did exactly the same thing. It went up 0.25%, forecasted to be 5, actual was 5. And for the 4 hours after the news announcement, prices shot up and continued going up. And if we look at where it is now, I think I can do a daily. No, I can't. So the longest it looks at from the previous, so we'd have to go to our live charts, look at the March announcement and see if this gap, A, was filled, and B, did it continue going up as a result of this interest rate decision. Do remember, what drives markets, what drives value, of any particular instrument, regardless of whether it's gold or a currency or other commodities. Predominantly, they're kind of priced in dollars. So the dollar is obviously going to be impacting all these other instruments. And that's how you can build up a little bit of expertise and a little bit of understanding on how these different news announcements affected price, not only 4 hours, but you could even go even closer. You can say, okay, what happened in the 15 minutes after the news announcement back in March, right? So we had the news announcement, gapped up, and then continued going up, right? If I now go to what happened yesterday, it gapped up, went up, and then came down, and now we are trying to figure out what is going to happen next. So if we go to the 4 hourly after the event, we can see again, for the Eurodollar perspective, markets gapped up, came down, filled the gap, and then started going up. And it continued going up, and I'm going to have to pull my chart back up. Let me just pull my chart back up, and then I'll answer. We have a question here. Why the dollar is weakened despite the rise in interest rates. Okay, so we have a question here. A bit of a complex answer because the value of the dollar is related to many things, not least the interest rate. So if you have dollars and you have to deposit those dollars, is that strong for the dollar or weak for the dollar? So for example, if the interest rates went up, holding the dollar is going to have an impact on that. And that's one thing that affects the dollar. There are other geopolitical things happening with the US dollar. which probably have nothing to do with interest rates, but more to do with the geopolitical things happening, including things like the BRICS countries moving away from the US dollar and utilizing their own currencies to purchase large commodities, things like oil and wheat and other things that are usually priced in dollars. So that kind of, it's not just about the interest rate decision, but it's also a part of the geopolitical changes that are going on. And if, for example, the BRICS, including South Africa, include or not use the US dollar, that is obviously going to have a weakening impact on the US dollar. And I think that's another discussion, and it definitely is worth having and definitely worth researching, because the dollar is and could be under pressure. However, notwithstanding the fact that it is so strong and it's so entrenched and it's so used as a benchmark for so many currencies. So there's some interesting things happening on the US dollar. I hope that answers the question. Right, what I was going to do was show you what happened 4 hours after the news of yesterday, shot up, came back down. The dollar is strengthening in this example, but if we then go to the charts, it reached a level. So let's again do the same thing. We'll go to the 4-hourly charts, magnify it a little bit. We can see the impact immediately went up as the plus Zenfinex tool showed, hit a level of resistance, and now it's coming off. Will it come all the way down to here? We don't know, right? What we can do is, if we believe that, we can take a trade, we can put some stops, we can put some targets. And trading is slightly different from investing, because then you're looking at, and really referring back to the question, how is the dollar affected? The dollar affects all major currencies because a lot of them are paired up. The British pound against the US dollar, a lot of the indices, a lot of the stocks are priced in dollars. So this is what I was really saying, trying to answer the question, is the dollar is used in so many pricing models that if there is a shift away from there, I'm not suggesting there is going to be, or whether it be successful, that's more of a political, geopolitical question. But from a trader's perspective, we don't really care that much, because as technical traders, we tend to look at price, see what's happening right now, where it might go in short term, medium term, and long term. And if we do it purely from a technical perspective, the fundamentals, remember, drive the technicals. If something is happening from a fundamental basis, that will obviously impact the technical levels that it reaches or doesn't reach. I hope that answers that question. Okay, I think, is there any more questions? Because I want to go back to the Zenfinex tools. I probably won't have much time to spend on them today, because we spent so much time on, is there any instruments, by the way? Does anybody want me to look at any particular instrument? And we can do sort of a top-down analysis and just get a perspective on, where things may be going. So if I just get rid of that, I'll just wait a minute. I think I've answered that question. And I think we were looking at a short-term perspective for the euro dollar. And we were saying, weren't we, just a few minutes ago, had we been in our live trading room, we would be looking, and I didn't expressly say it because I'm not really allowed to in a webinar, where I think markets will go from a trading perspective, only from a technical perspective. Then we talked about the fact that this level has been reached and supported quite well. So there would have been a nice little trade there. Right, guys, I'm going to go back to the plus Zenfinex tools. And I just want to kind of show you some of the other tools that are quite useful, but I find the news one really interesting. So let's see if there's anything potentially. So this idea, right? Okay, let me make sure I'm not flying around too much for you guys. Move this over here. Yeah, so the tools that we have here are on the left-hand side. We've got technical views, which is some trading ideas, which are put out, on a regular basis. And again, these are free. Have a look at them, analyze them. And what we will also do in our live training room is look at these setups and see how on our own charts, if they make sense or not. We have featured ideas, which we just looked at, what was found. So it'll give you a description of the pattern. This is called a 2-bar reversal. So markets came down, immediately reverse, and that is usually quite a strong bullish signal. However, from a 30-minute perspective, I think these are sort of 30-minute, let's see what it says, on a 15-minute chart. So obviously the news is going to impact these signals for a period of time. We looked at economic insights, which, although we looked at yesterday's news, we can also look at what's happening today, and we can filter these by just looking at the main currencies and the highest impact. So what have we got today? We have obviously some Euro news coming out midday. Let's make sure that is today. So that's tomorrow. Make sure we're on today. So the euro dollar will be affected by balance of trade in the US, initial jobs claims. So again, just want to make sure. So this is likely to be around 1:30. So 1:30 would be a really good time to have a look at these and see how. I'm just tempted to look at this. Sorry for this, but we can look at what happened in previous events and how an actual greater than forecast impacted the euro dollar. The euro dollar is what we've got here. We can actually just put it on different currencies, but it's not on gold or any other type of instruments. So we can see here actual 70 as opposed to 69, and that, for whatever reason, balance trade weakened from the previous event. So this was April. I don't think that's actually come out yet, so that's interesting. Anyway, and you can look at different news items and different regions. If you want to have a particular currency that you want to look at, you can filter these out. And generally, I think it's a pretty cool tool. Look, we're coming to the end of our 1-hour session. It seems to fly by too quickly for my liking. And I'll just finish off the last couple of slides here. So we had a look at the euro dollar, the indices. We looked at gold. We didn't look at oil. And I gave you the link to sign up for a free membership, no cost whatsoever. And we looked at the technical views. We also looked at the economic view as well, but I didn't cover that on my slides here. And just remember, these trade ideas every single day within the ZenFinex Plus tools. And also, if you want to send me an email regarding joining the live trading room, please email me, express your interest, and I can put you either on a wait list or get you in, and we can actually do some live trading rather than market analysis, which we have to do in this kind of wide open environment. But in the live trading room, it's a much more closed environment, and we can, have discussions about trade setups and actually take live trade setups. So on that final note, thank you all for attending. I've really appreciated your time. I appreciate your questions. Don't hesitate to contact me if you have any questions that come up to you afterwards, or anything that you would like to for me to look at in the future. I'm more than happy to do that. So on that note, have a great day, guys, and see you next Tuesday when we have the next webinar. Thank you.